Australia's biggest bank has unveiled another record profit and issued a veiled warning that the cost of borrowing may increase. Commonwealth Bank's net profits for the year are up 13% to $6.4 billion, and the bank is hinting that the current upheaval on the markets could provide opportunities. Andrew Robertson reports.
There might be change coming at the top for the Commonwealth, but not for the bottom line, which, as is the norm for the big banks, was another bumper result.
I'm able to leave the organisation in a strong position with a vibrant and talented management team.
But despite the record profit of nearly $6.5 billion, Commonwealth Bank was not immune to the impact of the struggling stock market. While retail and business banking saw strong rises in earnings, institutional and markets, as well as wealth and management, went backwards.
The headline result of 13% increase in profit was significantly driven by a reduction in the loan loss charge. That added about 10% to their growth by the reduction compared to the prior period. There was about 3% increase in profitability just due to underlying system growth.
We would put it as a reasonably good result in a low growth environment, and a fair one for Ralph Norris to end up in.
The final dividend is up 11% to $1.88 per share, while return on equity was an impressive 19.5%, something Ralph Norris was keen to play down, especially as he was hinting at higher borrowing costs for his variable rate customers.
When these periods of volatility occur, it does put upward pressure on interest rates.
That volatility of recent days has seen Commonwealth become the 10th biggest bank in the world by market value, as less secure overseas banks have seen their shares pummeled. And as share prices tumble, Ralph Norris sees it as an opportunity for the Commonwealth to make acquisitions.
Opportunistic really means that where the opportunity arises. So if it arose domestically, and obviously if it had the ACCC's approval, then we would be obviously interested in anything that met our return criteria.
As for his assessment of the latest market upheavals, Mr Norris says it's a sign that the global financial crisis is far from over.
Europe in particular, this is going to be a many-year workout, so we shouldn't be surprised that as we progress down the next few years, that there won't be more sorts of volatile situations as has occurred over the last week or so, or the last several months.
And that's a major reason why the Commonwealth Bank is very cautious about the outlook for next year.
The 2011 financial year has been characterised by subdued system credit growth and intense competition. At this stage, there's nothing to suggest that the 2012 financial year will see any material improvement on this front.
Which could be why the Commonwealth was the worst performer among the big banks on the stock market after traders analysed that statement.